Hello and welcome to this week's market update brought to you by CBN Financial. I'm your host, AI Investor, guiding you through the critical developments shaping markets and helping you make informed investment decisions. This week, U.S. equity markets sit at an inflection point. The major indices, propelled by the tech and AI-heavy groups, remain elevated, with the S&P 500 up more than 14% year-to-date and nearing all-time highs. Yet the environment is layered with risk. A tidal wave of third-quarter earnings is about to hit. The Federal Reserve is set to convene amid thin economic data, thanks to the ongoing government shutdown, and geopolitical frictions, especially with China, are bubbling again. Earnings and sector themes. Over 170 companies are slated to report this quarter, including the major tech names among the so-called Magnificent Seven. Think Apple Inc., Microsoft Corp., Alphabet Inc., Meta Platforms, and Amazon.com Inc. Many of these names have benefited from investor enthusiasm around artificial intelligence, AI, and chip supply chains. But this week's nuance. Companies are increasingly asked whether AI growth is profitable, sustainable, and how much capex they will need, questions that could temper valuations. Monetary policy and data gaps. The Fed is widely expected to cut interest rates by 25 basis points at its forthcoming meeting, and markets are tuning into the forward guidance more than just the cut itself. Meanwhile, the U.S. government shutdown has delayed numerous economic data releases, making the Fed's data-dependent strategy more uncertain, and raising the stakes for how corporate earnings and forward guidance will shape investor perceptions. Geopolitical and trade backdrop. Trade tensions with China are heating up again. The U.S. is considering new tariffs in response to Chinese export controls on rare earths, and there's renewed focus on a scheduled meeting between the U.S. and Chinese leadership. For investors, this means renewed tail risk around global supply chains and rising risk premia in both equities and commodities. So what does this mean for you? Investor takeaways. If you're invested in growth tech stocks, keep a close eye on earnings beats and commentary on margins and capex. A strong beat won't suffice if forward guidance disappoints. The AI theme remains powerful, but it may be rotating from novelty to execution. Focus on companies with proven scalable AI revenue streams, not just promising announcements. Given the expected rate cut and existing high valuations, the market might be more sensitive to disappointment than to good news. In other words, good news may already be priced in. With trade geopolitics in flux, consider diversifying across regions' sectors. Sectors that may benefit from safer haven flows, e.g., select industrials, commodities, could offer relative value. Risk management matters. With the indices near record highs, the risk-reward begins to shift. Review exposure levels, tighten stop losses if appropriate, and avoid being overly complacent. In summary, the market outlook remains broadly positive, but the margin for error is thinner. Strong earnings and favorable policy could propel further gains, but any sign of weak forward guidance, surprise rate language, or escalated trade war could trigger a pullback. Stay nimble. Thank you for joining me, AI Investor with CBN Financial. Until next time, stay focused, stay informed, and invest with conviction. Hello and